What's good, YouTube? It's Dr. FX here again with another video. Um, another video for the road to 50K funded account. And this is the funded trader. Today we're gonna be talking about the trade that I took, my first trade. I actually took it last week on Friday, NFP Friday. I took it, but just this is the funded trader that I'm trying to get my account from, and this is the trade that I took. We had the open price. At that point, it was a buy, GBPI, and the volume was $100 lot, so 10.00. And I got about $822 out of that trade. Now we're gonna talk about, we're gonna go to charts and look at the setup and how I took it, why I took it, what I was thinking while I was in the trade, and things like that. So we're gonna take a look at the charts real quick. This is GI right here, and from looking at it, we can see that, in fact, that there is an inverted head and shoulders in here. And let me delete this line. Let me delete this zone real quick. I'm gonna keep the entry there because that's gonna play later on. But we basically have this inverted head and shoulders in this area. And for my last video, when I was talking to y'all about the Forex forecast, breaking down what GJ was gonna do, we saw that GJ was actually in a head and shoulders from the uptrend. You know what I'm saying? So we had a head and shoulders this way, but now on GI, that's how we had it on GJ. But now on GI, we got it this way. You know what I'm saying? And on the textbooks, it looks like that. But in real life, this is how you'll see it sometimes. It won't be as clean and crispy as you want it to be, like how the textbooks show you. But I took this trade. My entry was over here. But first of all, we're gonna just really break this down and think and talk about what I was thinking at this time. At this time, I was looking at this and I seen, because at the time price was only right here. When I came to the market, price was like this. This is what price was doing. And I seen that we had an inverted head and shoulders, and I had seen that this area was the area, because the market is not about a specific pinpoint spot. Like, it's not like something like this and it's like, okay, that's my area. When price comes to this line, I'm going to get in. That's not technically true, because it's more of an area than just a I can't even say the word, specific price point. So I marked up this area. This is the area where price can come in. It can come in this area and it can go all up in here. And as long as it stays in this area, doesn't break below or close below and stuff like that, then we still have a chance for this head and shoulders to happen. So it's not about just a pinpoint spot, but an area, because price goes by areas, not by a pinpoint spot. So what I saw is I saw, well, price had this big down move. Price had this big down sell move right here. And then it had buyers come in and take everything that the sellers had. But if we look at it from the sellers aspect, we can see that, okay, sellers came in, they came in super hard, but the buyers took a lot of time getting there. So the buyers aren't really that strong. So it's probably most likely not going to just burst out of here, because the sellers still has a lot of the momentum. Yes, the buyers came back. Yes, the buyers took all this back, but look at how fast. You gotta look at speed and momentum also. You can't just look at what candles are doing. Oh, candles came all the way back and ate all this move up. But yes, it ate all this move up, but look at how this move was, look how fast that move happened. So I'm not automatically going to be thinking, like I said, it's not automatically just going to burst out of here. But I'm a scalper. All I need is 15 pips. All I need is 15 pips. You know what I'm saying? So as long as price moves, you know what I'm saying, 15 pips, that's all I need right there. And I can make good money with that. See, the way I trade is I trade, I'm very conservative on where I get in at the market, but I'm very aggressive with my lot sizes. I'm very, like, let me say it again, I'm very conservative on my entry points and when I get into the market, but I am very aggressive with the lot. So I don't need that many pips in order for me to make a lot of money. You know what I'm saying? So I saw that, I understood that. Like I said, remember when I talked about it in my last video, don't just forget about the pattern. Focus on the logic, focus on the context of this pattern. Not just, okay, this is an inverted head and shoulders, let me buy. No, that's not what I'm thinking. I'm looking at it for what it is. I'm not looking at it for what it is, and I'm looking at it as, okay, we got this big down move. We got buyers coming back in. So even though this move was faster, well, the buyers still came in and took all that back. And then look at how the sellers, it came back to this point again. Look how price came back to this point again, but the sellers didn't come in as hard. The sellers didn't come in as hard as it did here. So we understand, okay, well, the sellers didn't come in as hard. Well, it's coming to meet this right shoulder area. And that's what it did. And now that I see that, now that I understand that, I'm like, okay, I see that the sellers are starting to get weaker. The sellers are starting to get weak because look at that move. Look at the volatility and the momentum of these candles. The red ones are not really that strong as they were over here. So, okay, I understand that now. So now I got this 50 SMA curling through here. This 50 SMA curling through here. And the 50, and if for people who don't know what the 50 SMA is, the 50 SMA is basically an average of the previous 50 candles. So this line is getting the average of the last 50 candles. And so knowing that, well, I know that, well, when price goes above this 50 moving average, and let me show y'all, hold on, before I get back into it, let me show y'all which one I got. I got the moving average. Where's that? It should be on here. It must have disappeared. Oh, SMAs. It should be simple moving average. You should just be able to look up simple moving average. And yeah, stock inbox. This is the one I use, stock inbox. I need to favorite again. I don't know why it wasn't favored. I don't know what happened. But yeah, that's the one I use. And you can go in there. And what I do is I take off all of these because they'll have all of them going. I'll take all of those off. And then I'll change the first one to green and into red, and then my inputs I have 50. So and the thing is about the 50 and the 200 SMAs is that they show you a good what market we're in for real. So when price comes above the 50 SMA, it's gonna be in the buyer's market. But that's the theory of it. That's the theory behind it. You know what I'm saying? But when I'm trading, I don't look at, like, I usually take this off for real when I'm looking at price action. When I'm looking for my trades, I don't have the SMA on there because the indicators come last. Price action comes first. The indicators come after I figure out where I want to get in at, what my trades are. Then I look at my indicators for extra confirmation to see, okay, does this have the momentum that I'm looking for? But I get all of my pointers, all of my evidence, all of my claims from price action, from looking at the candles, from candlestick analysis, from candlestick patterns, from chart patterns. You know what I'm saying? So I see that, and I see that, like I said, the sellers weren't coming in that hard anymore. And then now I'm going to bring in my indicators. Now I want to see what my indicators are doing. So I got my indicators. I like to use the stochastic RSI, and that's different than the stochastic. The stochastic RSI gets the RSI and the stochastic in there as well, so it's more accurate than the regular stochastic. I also use the vortex indicator, and when the red and when the green is above the red, this is the basic theory of it. When the green is above the red, that means that the buyers are in control. The buyers still have the control. And then I use the MACD, and if we look at the MACD, we can see that the lines aren't pushing through the histogram. When the lines are pushing through the histogram or they're below the histogram, then that means that the sellers are pretty much in the momentum. This is the 30-minute chart. So I see that and I see, okay, well, the stochastic is in the oversold. When the stochastic goes into this area below this dotted line here, and let me change this. Let me change the arrow real quick. Below this dotted line right down here, then I understand that we're in the oversold and that price could potentially buy. It doesn't always buy, but see, look, see how it got down here, but it didn't start buying right away. It still stayed down here for a little bit. So it's not just about, okay, is it oversold? Is it oversold? Oh, let me buy. No, it's okay. Is it oversold with price action, with the structure of price action? Well, I see that it's oversold right at what? The shoulder, the left shoulder. So, okay, I understand that. And then I see that the vortex is above, the green is above the red, and then the MACD lines are above the histogram. So that has a lot of potential for me to be able to catch this buy. And I was like, okay, well, a lot of things is looking my way. So let me go down to the 15-minute. Let me go down to the 15-minute, and then let me open up my SMA now. Now this is where I started to get into my entry. This is where I started to understand. Okay, this is where I want to enter at. And then hold on, let me show y'all where I like. This is my entry. This is the pinpoint entry for when I got in. And I went for about 15 pips. I think I got a little less than 15 pips. It hit my TP, but I just was like, I was trying to see what it was gonna do, because the thing, and this is the thing I like about GI, because, and this is going, what I'm about to say is gonna come into play later when I talk about it. But the thing I like about GI is that the pip value is like it's like low. So when it goes 15 pips into the negative, I'm not actually losing 15 pips. I'm probably losing more so like 10 pips, because the pip value is low. It's not equal to the amount of pips that I'm obtaining. You know what I'm saying? So when it goes down 15 pips, I'm not down 1,500 on a $100 lot size. I'm down more so like 1,000, maybe 900, maybe I think I was down like 1,200. You know what I'm saying? On this trade, I was down about 1,200. On this trade, the price hit my stop loss. But that's why I don't like to use stop losses, because I don't like to manually put in stop losses. I still have my stop loss here. I still have it visually here. I can see it, but I don't like to put my stop loss in, because sometimes I want to see what the market's going to do at my stop loss. Sometimes the market can come down to the stop loss and wake you out and go right back up. So sometimes I like to see that. And in this scenario where I made that, this is where because I entered before this candle came out. I entered on that next candle that came out, because look at what it did. It came below the 50, closed below the 50, came back above the 50, closed, went back below the 50, closed, and then came back and closed above the 50. So what is that telling us about this scenario right here? The sellers tried to push it down. Sellers tried to push down price and make it close below and keep going, but it couldn't get there. It couldn't do it. And it had the momentum. So I said, okay, well, it tried to come up and close above the first time. It couldn't do it, but then it came back up again. So it must be on this touch wanting to go. And I like to trade with the momentum. I trade with the momentum. So when I'm trading the momentum, I know that it should not come anywhere near 15 pips. It should not come back 15 pips. If I'm going to be in the market, if I'm going to be trading, I'm going to take the momentum, it should just go. It should only come back maybe 9, maybe 10, but it should not come back 15 pips. But I don't just put my SL at 15 pips. I get in at places where I can put my SL at 15 pips. There's a difference. There's a difference. Yes, I don't want to lose anything more than 15 pips on my trades because I take bigger lots. So in order for me to fix that problem, I have to be very strategic on how I get into the market. So I'm going to put my stop loss below this structure, and it should not come below here. The next candle should not break the low of this candle if it's going to go. It should not break, the next candle that comes out should not break the low of that candle. But it did end up doing that. It did end up hitting my stop loss. But this is where, and see, this is why they say psychology is a lot more important than the technicals, because honestly, the psychology isn't what helped me win this trade. The psychology, I mean, no, let me tell you again, the technical analysis wasn't what helped me to win this trade. My markups, the way I was looking at the market price action, it didn't help me win this trade. My decision making and what I was looking at and how I was thinking during the trade. You have to be able to, and it's because people place trades and then think that it's over with. No, you, especially for a scalper, you gotta be able to look at the market while you're in the trade and not be taken by emotion. Not worry so much about what's about to happen in the trade. Don't worry about the outcome. Worry about the process of the trade. And then your mind, you'll start thinking, when you think with that perspective, you'll think of everything that you need to think of. So now you're not thinking, oh, is this shit gonna hit my stop loss? Is it gonna hit my stop loss? No, you're thinking, okay, it's coming down to my stop loss. Well, let me look at the bigger picture. Let me see, okay, well, if it does come down to my stop loss, well then I understand, well, we got the stochastic curling up. You know what I'm saying? And then we go to the higher time frames, we got the stochastic curling up too. We got the vortex, the vortex lines, the green is over the red. So me knowing that, I have to always keep that in mind. I have to keep the bigger picture in mind. That's why as a scalper, you gotta sometimes go back to the higher time frames, because then you won't be so scared, because there's gonna be a lot of movement on the lower time frames. There's gonna be a lot of fluctuation. You know what I'm saying? So I got in and you see that candle? You see how that candle, and let me move this out of the way for real. Let me move this out of the way so y'all can see the candle. This candle right here, and one 15-minute candle came and took me out. If I was in my feelings, if I was in my emotions, if I was just thinking emotionally while I was in the market, well then I probably would have got out of this trade. But since I was clear-headed, since I was clear-minded, I was thinking about the process and not the outcome, I understood where we was in the market. So I said, okay, it hit my stop loss. And here comes the pip value. This is where the pip value comes into play. I understood, okay, GI's pip value is low. So if that's the case, well, when it got to my stop loss, I was only down like 1,000. So I was like, okay, well, if I'm only down 1,000 or 1,200, then I'm gonna see if it hits. If I had my phone in my hand, and I had it on the close button, ready to close the trade, and I said I made the decision, and this is the decision that helped me win the trade. I made the conscious decision to say, okay, I'm gonna wait until price on my equity shows me 1,500. If price on my equity hits 1,500, I'm out the trade. I'm gone. I'm out the trade. So what I did is I made a decision, but that's only half of the battle. I made the decision, and I had to accept whatever came with that decision. Listen to me when I say this. Please listen to me when I say this. This is the psychology of the trade. I had to make a decision, but I had to accept the outcome of that decision. So if I make this decision to stay in this trade, and see if it'll go any lower and hit 1,500, well, then I have to be okay with it coming down and hitting 1,500 and me having to take the L. So knowing that and understanding the risk, now my mind is clear, truly accepting the risk for what it is, and my mind is clear now. I can look at the market for what it is and not look at the outcome and not look at the emotion that's in me. And so I seen that, right? Well, this is how the candle opened. The candle opened, came down, went all the way down here, wicked all the way up, came up 9 pips, came up about 9 pips, and then came back down. And you can't tell with the candle because it's back in replay mode, and you know what I'm saying, it's in the past, so you can't really see how it's fluctuating. But it came all the way up here, came back down into here, went back down probably about like 9 more pips. It was hovering around this area, and then it finally closed right here. It finally closed right here, and then what the next candle do? Next candle went up. Next candle went up. So instead of me taking that $1,500 loss, instead of me taking not even the $1,500 loss, instead of me taking the $1,200 loss and being in the hole, I made the conscious decision to stay in the trade because I understood price action. I understood the market. I understood where we was. You get what I'm saying? I understood where we were. So I was not afraid because it hit my SL. I wanted to see it come. I want my equity to go to 1,500 because that's what I was willing to lose. That's what I was accepted to lose. And if I lost that much, then that would have just been that. But since I understand the price action and everything, like I said, I knew that I could hold this trade. I knew that I can let this trade play around my SL and see if it's gonna work out like that. Now, if I was trading GJ or something, if I was trading GJ, because the pip value for GJ is more equal to the number of pips you get. So if it hit 15 pips, I'm gone. I'm getting out. But that's different. That's the different mindset that I have to click into when I go into these different pairs. That's why I said in my last video, if my mindset is right, then I'll be able to do what I need to do and win my trades. So I have to always have my mindset right. Mindset is always key. Psychology is more important than technicals because it comes down to this. This was the deciding factor of me winning this trade. And so what did it do? It ended up going up. Now, when it got up here, it wasn't at 1,500 because the pip value was low, like I've been saying. So it was more so at like 1,000. So I was trying to see what it was going to do, but it was fluctuating, sitting in here playing around. Before it did all this, it was sitting here playing around. And I just took my profit. I said, listen, it's my first trade. It's NFP. Listen, see, this is also key. How I was thinking while I was in the trade. You got to be able to think like this. I understood that, okay, it was NFP. I shouldn't even really be trading on NFP because I'm not a fundamental trader. I'm more of a technical trader. So me understanding that, I say, okay, NFP is here. Well, let me not even play around because it hit my TP. Well, let me just get out of the market. Let me just take what I can get because it's a Friday. It is a Friday too. So let me just end the week off with a win so I can come back into next week with that momentum. You got to be thinking long term and not just this trade, but the next trades that you might be taking, the other trades that you might take. You have to give yourself that momentum. And so I took that trade and I ended up winning. I ended up cashing in $822 because of the decision that I made here at this candle when it came down to my SL. And that's how I won this trade. That's how I broke down this trade. I could have won way more. I could have won way more. There was more money to be on the table. But I've gotten to the point where it's like, hey, bro, listen. You didn't have to go and work a job to make that money. You didn't have to go clock in nowhere and work a certain amount of hours to make that $800. So be grateful for what you got and take your money and be done. Even though yes, I'm on a demo account right now. Even though yes, I'm on the funded account trying to get the actual account, I still have to be thinking like that. I still have to be thinking like that. That's the difference between a professional trader and an amateur trader. A professional scalper and amateur scalper. I can't speak today. But that's the trade, y'all. And you got to just be able to think like that. You got to be able to use your mind and to be able to be clear-headed. That's why it's so important to be clear-headed in this market. That's why it's so important to really understand the mindset of the trade. Now, this ain't going to be how I trade every single time. I'm not going to make this decision every single time. I probably should have waited for it to retrace a little bit more, but I didn't. So that's how I won my trade. That's what I did to win my trade, and that's the video for today. So if y'all really mess with that and y'all really learn from that, like and subscribe to the channel.